Traders, you want to be able to trade and understand commodities and the link to certain currencies and how they influence each other. This is big. And what we're going to do in this video is we're going to break things down from an out of the box thinking perspective, thinking like I would, thinking like the macro beasts do, thinking like the big boys that are consistently making money. So what we're going to do in this video, I want to talk about Australia, the Aussie dollar. Now, those who've been following the content, well, people obviously within the macro mastery community will know how much of on an Aussie dollar bull I have been towards the latter stages of last year. And obviously, we've seen some decent performance in AUD versus a number of its peers. Obviously, we pick our pairs wisely. I'm going to share my screen in a moment and break things down. But we pick our pairs wisely, marrying up the fundamentals of Aussie dollar versus other economies, where ultimately we want to find the greatest divergence when we're trading. Now, look, first thing I want to talk about is, look, everyone spoke obviously about gold. Okay, we've had incredible buying momentum for gold prices. As you can see, we gained well over 70% for the year for gold prices and of the 2025. And when you look, there's still a lot of upside pressure. Now, I'm going to tie this in with AUD in a moment, but there's still a lot more upside pressure to come. Obviously, there's a number of supporting factors with gold. Just to quickly bullet point them, because this video isn't specifically on gold. But number one, obviously, we've got the geopolitical tensions right now, as you're aware, with Venezuela. Well, with what happened, US arresting the Venezuela president. Okay. And obviously, Venezuela sits on one of the world's largest gold reserves and oil reserves. So it just creates uncertainty there. And obviously, that encourages gold flows. We have two interest rates, right? Rates expected to come down in the FOMC in the year of this year in 2026, and obviously power is going to be replaced in May. Okay, and as I said in the previous video, his successor is expected to be a lot more dovish and aggressive with rate cuts. And then number three, at the end of the day, this geopolitical, what's happened where the US is effectively, I mean, from a legal perspective, it's obviously very shady. Well, not very shady, somewhat shady. Okay, but where you've got one country going into another country and basically capturing their leader is like, you just sort of lose trust and confidence. It's like, if that can happen, anything can freaking happen. Do you know what I mean? It's in some essence. So there's so many supporting factors for gold. And obviously throughout 2025, obviously I was a massive bull, as a lot of you are aware. I've been screaming the gold buys for a very long time, and 5K is coming. Now, why am I even mentioning gold? If you look at silver as well, same thing. Look at that monthly performance. I said this before the closure of December, that it's obviously expected to close bullish, and it leaving that wick here, as you can see here, we're expecting to fill that wick to the upside, getting a technical wick fill. Things are bullish on a macro level. People are screaming about gold, but then look at silver prices. Silver prices gained over 140% on the year. Also, look, this is something, again, this is out of the box thinking, right? If we bring up platinum prices, okay, look at platinum prices for the year of 2025. Okay, so January, year of 2025, it's a gain of over 180%. Then if we also bring up palladium, palladium. Oh my gosh, brain freeze. Palladium. Here we go. Okay, these are palladium prices, also another metal. So let's just look at the price gain here. You know, it gained 135% on the year. So why am I mentioning metals? Okay, why am I mentioning metals? Because I'm an out of the box freaking thinker. I'm not just thinking like retail. Okay, I don't do that. Okay, I don't do that. That's why I've been in the game for 18 years now. 18 years. I need to update my bio. 18 years coming, close. But why does this benefit for AUD? Because look, Australia, as you can see, is a world leader in producing and exporting many metals and minerals. They are. This is why you've heard me say the term that Australia is a commodity-based economy. They're a commodity. It's a commodity-linked currency. They're a large, very large, producer of iron ore. That's their top export. Coal, gold, obviously there, uranium. Now, obviously, largely benefiting from gold prices. But then, where it's a decent gold, producer exporter, all this benefit from like externally, with metal prices in general rising. Obviously, if you've got a sector rising, an asset class, that is going to still be beneficial directly from gold, but then just in terms of the overall metals performance, indirectly for Aussie dollar as a commodity linked currency, as a commodity linked economy. So Why am I even mentioning all this? I'm mentioning all this because AUD is going to benefit. AUD obviously is one of those things where it's, sensitive to Chinese development, but it also has its own SHIT going on. It has its own things going on, its own bullish factors that can drive flows into the currency. So this is why I'm expecting a continued outperformance anyway in terms of metals demand, because what we're getting anyway is globally we are seeing more and more. This is something I should have prepared in this video, to be honest, in terms of the data, but you can take my word for this. We are getting a lot more flows and diversification from big players and portfolios into metals. We've seen that the figures jump up incredibly, in very, very high billions in 2025 in terms of portfolios and flows being structured around gold. And bear in mind, that was just a freaking 70% jump in gold. As I said, palladium, platinum, 180%, 130%, silver, 140%. People are adding these to their portfolios. They're diversifying outside of the traditional, like they're looking at hard assets as well. It's not just about equities, it's not just about stocks. Diversify your portfolios. So with this, I'm expecting to continue push to the upside for these metals. And this makes AUD highly attractive. Like, I'm just looking at AUD USD here. This is not one that's massively on my watch list. I need to clean up the charts here. This isn't AUD USD specifically is not massively on my watch list, but I would expect, it's a tricky one because obviously with dollar, but I would expect continued push to the upside for AUD versus USD. There are some other Aussie pairs which I'm going to go on to in a moment, but you can obviously see where structure's at right now. It's been printing high highs, high low, high high, high low, and we're obviously in this higher high phase right now. You can see things really nicely, on this weekly after. Look at that, very nice structure. Obviously, albeit it can range and it can. You have to be very, very patient with AUD, USD, but it is trending clearly. It's very clear. Look at it. Right, bam, 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 bam. And obviously, as I say, we're in this high phase. Wait for that push higher, wait for that pullback. Don't just jump in out of FOMO, because we will pull back and then we will buy those dips. I think realistically, when you look at AUD, USD, there's no reason as to why. You know where we're heading. You can see it there on the monthly. Where's the next major monthly area? Next major monthly area is 68. Once we deal with 68, which I believe we will, obviously, markets don't move in straight lines, but we'll have room to run in towards 69, 69.50. The pair that's largely on my watch list, okay, I traded a little bit last year, but this is I've been screaming about this in 2025 during this consolidation and telling you, watch this freaking breakout. Well, not you, but the macro mastery community. Okay, people in the community there. Obviously, they have large oversight of what exactly I'm thinking and what I'm looking at. But the beautiful thing with AUD CAD, why I like this, remember I said to you guys before, I like to find freaking divergences. And there is a massive divergence right now with Australia versus Canada. Why? And I'm just spitting, you can see I'm just spitting a lot of facts. I'm not waffling, I'm just giving you what you need to know. So it's a lot of information, but this is why I want you to do your own research as well. Or as I say, come on board via the macro mastery, and obviously I'll show you the way. But right now, so if we bring up factories, bring up Forex Factory a moment, I just want to show you something to be aware of. So right now we have let's just bring this up, Canada, Bank of Canada. We have a large divergence anyway between what the Bank of Canada are doing and what the RBA are doing or expected to do as well. So let's just bring this up, go to the last decision, let's bring up all the former decisions. So Bank of Canada rate, you can see obviously quite consecutively, and quite drastically, they've dropped rates, from 5% all the way down to 2.25%. They've made some 50 basis point cuts here and there. And the door is open to still bring the base rate down. Dependent on obviously data, we need to see some further weakness in the labor market. We need to see inflation cooling. We need to see growth cooling. So yeah, I'm still going to go back to Canada in a moment, just why I like this trade. And then just look at RBA here, right? Rates are still higher. They've been cutting very gradually. You see, it's not drastic like in Canada where the economy's needed it. And there's even talk. I spoke about this in a previous video, but go and look at all the data. Okay. Inflation still sticky in Australia. GDP still generally steady. Labor market still expanding. There is the possibility, market's been pricing the possibility of a rate hike from the RBA. You see how everyone's cutting, Bank of Canada cutting, everyone's cutting. But there's a potential that they guys could hike rates in order to bring down inflation, and the labor market's still hot. So that's a divergence. Okay, that's a divergence between what's going on there in the Bank of Canada and what's going on in AUD. So this makes it highly divergent, attractive on so many levels. Okay, and then as a last sort of major bit of icing on the cake is oil prices are largely subdued, and if Trump takes control of Venezuela oil production and ramps it up and floods the market of oil, prices are going to come down. Okay, a lot of supply. Demand's already low in oil. There's so much supply right now. Oil's being produced at record amounts per day, barrels per day, and the demand's not meeting. So I'm expecting prices to continue to head to the downside. Check through my X. Check through my X. I've been calling oil short since August 2025. I've been calling those heavy shorts. I called them earlier in 2025 as well. I've been short oil for a long time. Okay. I've been short oil for a long time in terms of my bias. And obviously, remember, CAD is a commodity linked currency. CAD is correlated with oil because it is a massive, massive. You see, like Australia, huge gold exporter, Canada are a massive oil exporter. So that as well helps with that divergence. See, like how all my thinking is just out of the box. It's not generic, just looking at fucking candlestick patterns. You understand? So structures obviously to the upside, printing high highs, high lows, been consolidating a little bit on a weekly, and now we're getting that breakout. Okay, I was expecting this at the start of the year. We're getting that breakout now of this range. You know, we were capped to the upside around 92.50, capped to the downside around 90.50-ish to sort of 200 pip range. We've had a big now, look, you see this momentum, just want this to hold, and I'm expecting that to continue to push the upside. Okay, I am currently eyeing longs at the moment. I just want to make sure this isn't a fake out of this range. And then we're going to be looking at some longs. So that's one example. There's plenty of examples. AUD and CAD, we had some longs throughout last year because of the same thing is similar to, not the same, but similar to, Australia and Canada in terms of that economic divergence and monetary policy divergence. Same here. RB and Z have been cutting rates. RBA potentially hike. We're in this higher phase. I'm watching the pullback and I'm going to look at potential further longs. And there's no reason as to why this can't fly. So a lot of opportunities, guys, and this is just me just scratching the surface. There's a ton more I could talk about, but just try to give you a little bit of value there. I do this, we do this, not even just me. We do this on a daily basis via the Macro Mastery. So if you're interested, you can check that out. Some details below. Obviously, we only want the right people that are in there. But other than that, guys, stay lit, stay blessed, and I'll catch you on the next video. Let's get it.